C3.ai, the enterprise artificial intelligence company, reported quarterly financial results that are sending the stock price soaring by over 20%. I'm going to talk about the reasons why the stock price is soaring, and I'm going to update my recommendation for C3.ai stock, let you know if I think the stock is a buy, hold, or a sell following these quarterly financial updates. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So one of the things investors are really liking about C3.ai in recent quarters is the second derivative growth. What I mean by that is not just the rate of revenue increase, but that the rate of increase is increasing. And you can see this for several consecutive quarters here, starting in the fourth quarter of fiscal year 2023, where the company's growth rate was flat, meaning no growth, then increasing to 11%, 17, 18, 20, 21. So you can see that incrementally the rate of increase is getting faster. And investors love to see that. I love to see that. That means the company's demand for its products are increasing at an increasing rate. And that foretells great prospects in the near term and the medium term as well. So, if you've already read my book, you'll know that one of the 6 steps in my investing framework is the customer value proposition. How valuable do customers feel your products are? Do they feel like they're getting a good deal with the money they're spending with your business? And one of the ways you can measure that is with the Net Promoter Score, the NPS score. And according to C3.ai, their Net Promoter Score is among the highest among some of these large tech companies. And according to C3.ai, they say that their Net Promoter Score is 61, whereas one of their competitors, Palantir, which is the best-in-class service in its category, it shows as 33. They also show Snowflake at just 40. The last time I checked Snowflake's Net Promoter Score, it was around 70. And so the data on this is a little bit murky, and companies can have different results for different time periods. And so it's just one measure I use among others to determine the customer value. And the other one, of course, we already looked at, which is revenue growth. That's the most obvious one. If customers feel like they're getting a good value with your product, they're going to be spending more money with your product, and your revenue growth will be increasing. And so we saw that already with C3.ai. So a couple of data points here suggesting that the customer value proposition for C3.ai is strong. I like this breakdown here for C3.ai's revenue growth and the several metrics that combine to return this revenue growth. And you'll see here that growth rate accelerating here from the fourth quarter of 2023. And even before that, the quarter before that, they were negative year over year in revenue growth. So they've got 1, 2, 3, 4, 5, 6 consecutive quarters of accelerating revenue growth. And that's tough to do. And C3.ai is managing this difficult business accomplishment. And one of the ways they're doing that is they're able to offer their product at a lower price point. You can see the average selling price here in 3 of the 4 quarters here in 2023. The average selling price was over $1,000, approaching $1,900 in one quarter. But you could see here in the recent quarters, the average selling price, 4 out of the last 5 quarters, the average selling price didn't increase above $900 with only one quarter of $1,200. So they were able to offer their products at lower prices. And while at the same time, I'm going to share with you a little later, they're able to increase cash flow from operations, even though they're generating lower average selling prices. The remaining performance obligations, the RPO, eventually turns into revenue. These are contracts the company has signed that will eventually turn into revenue. And this is one of the things that was not so great about the company's performance. You can see this RPO decreasing several consecutive quarters now with declining RPO. And this could signal that revenue growth could slow down in the future if the company doesn't accelerate or stop the decline in RPO and sign new contracts to take the place of existing contracts that it's servicing. And when it services the contract, the RPO decreases. So when C3 AI first signs a contract, it goes into RPO. And then when they deliver the service, that RPO goes into revenue. And then the RPO decreases and revenue increases. And so if you don't get new contracts, your RPO will continue decreasing as you service those contracts. You've got to sign new contracts so that you can continue your RPO, and then you don't get a slowdown in revenue, because eventually, if RPO keeps falling, you won't have any contracts to service and your revenue will decrease. Looking ahead, the company expects the good times to continue with forecasts for continued revenue growth acceleration. At the midpoint here, they're forecasting revenue growth of around 25%, which would be an increase from the previous quarter where they just completed revenue growth of around 21%. For the full year in 2025, they are forecasting revenue growth of 23% at the midpoint, which would be an acceleration from the previous year as well. So management expects revenue growth prospects to continue. They are optimistic about the business prospects going forward, not just for the next quarter, but for their full year, which right now they're in their fiscal year 2025. I know it's annoying. Companies are allowed to have fiscal years that are different than calendar years. That's why C3 AI is in the second quarter of their fiscal year 2025, even though we're in the fourth quarter of calendar year 2024. It's annoying, but they are allowed to do that. C3 AI is still losing money on the bottom line, but here they're forecasting when they expect to be profitable on a non-GAAP basis. If revenue continues to grow at the rate it's increasing, they expect their expense growth to be slower than the revenue growth and the lines to converge and the company to be profitable on a non-GAAP basis. And this looks like a couple of quarters ahead. So if the growth rate continues, they do expect that the profitability on the bottom line will be achieved over the next few quarters. And lastly, one of the other things investors really liked about C3 AI was the more than double the cash flow from operations. In the 3 months that ended July 31st, the company's cash flow from operations more than doubled to $8 million, up from $3.9 million in the same quarter last year. So unsurprisingly, C3 AI stock is up over 25% following these positive results. And the stock price is now trading at a forward price to sales of 9.15, the most expensive it's been since April of this year. So I've had this stock rated as a hold all year long in 2024. I last updated that on September 4th. And following these results, I think it's a big step forward for C3 AI, but the valuation also increased by over 20% to compensate for the fact that they made a big improvement. So overall, I'm keeping the stock rated as a hold while admitting that it is getting closer to becoming rated as a buy if the company continues making this type of progress in the business. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.